This is the briefing for Friday, May 9th. I really thought that by the end of this week, the indices or the market would give us some type of indication as to the next greater degree time and price move, meaning at least an intermediate term move in the market. Now, as you can see, this is an hourly chart of the spiders. This is the hourly chart of the Qs, and this is one of the IWM. Now, for 7 days, you can see we've been in a pause phase. We certainly have reached a certain key reference area, an important key reference area in both the spiders, the Qs, and the IWM, and we've paused. Now, the Russell giving a little bit more strength, at least in today's trading, or yesterday's trading, and then today's trading, we got a little bit of a down move in the Russell, but it's not so much in a rotational pattern as the NASDAQ or the Qs and the S&P, the spiders are, as you can see. Now, the upside resistance is going to be the high from yesterday, which is 570 area, and then of course the support area, the next short-term support area is 557. In the Qs, we're looking at support coming in at 477 and resistance coming in about the 493 area. What's important to note here is that from a short-term and an intermediate-term perspective, the internals of this market are not confirming this move, which gives me great concern over being long this market. Now, this is a market that is dominated by news events. So certainly any type of news event can change the perception of value and can change the internals to support price, which would mean some type of good news other than tariff settlement with the UK, but some type of other good news that would give the market enough strength from an internal perspective to continue the rally and for the rally to explode. Now, with that said, it's my opinion that unless there is some unknown event out there that we don't know, if nuclear war starts to happen between India and Pakistan, if China invades Taiwan, if there's some type of event that's not foreseen right now, if that occurs, I think this market is very weak, and I think we'd see a fairly substantial move to the downside. On the other hand, if good news starts to come into this market, which it did in yesterday's trading, then I would suspect that this market is going to skyrocket. And this is a tremendous buying opportunity, as it was when it reached the bottom or the low recently, and still is a buying opportunity. But that's yet to be seen. And the problem is that the market is driven right now by news events, and it's virtually impossible to analyze and predict news events because they're unknown. They're unknown factors. Now, getting back to the technical aspect of it, what I'm seeing in terms of the analysis of the market is that it's a very weak rally, and it has reached certain key reference areas that suggest that potentially we're going to see some type of rotation back to the downside. Now, you can see we looked at the hourly chart. I want to point this out one more time. You can see this rotation here and this rotation in the Qs. Now, this is the spiders on a daily basis, and you can see this is the rotation I'm talking about. So for the last 2 days, we were below trend. This is the last trend we've seen. Volume is extremely low and even going lower. Now, we did have a little bit of a spike in volume yesterday, and I pointed this out in yesterday's briefing to subscribers, that what happened at the end of the day yesterday was that the market declined, but we had a huge amount of selling volume that hit the market in the last 15 minutes of trading yesterday, which gave it this little bit of an input or impetus in increase in volume. So that little bit of volume increase on a daily basis was certainly due to selling volume as traders exited their trades in the last 15 minutes of trading in yesterday. 52-week highs minus 52-week lows, still flat, just flatlined. And we still have this divergence in market breadth, which is pretty significant. When you look at this rally and you look at what's happening internally with market breadth, it just does not paint a good picture of a very healthy rally. With that said, we have to respect the rally because at some point in time, as I said, there can be a news event and this can change pretty dramatically. Typically, this is not statistically correct. It is just psychologically what I use in my own trading is that I assume that there's a 70% probability that price is going to correct to the internals. But that leaves a 30% probability that the internals will correct to price. That would suggest then that if there is a news event, that the 30% probability would in fact become a greater probability, and the internals correcting would then suggest that that's going to happen. We're going to see the rally continue. Now, this rotational pattern right here is on lower volume, which is typical in a rotational pattern. But when you look at what's happening in terms of this volume going all the way back to here, I didn't put a trend line up, but if you put a trend line up, it would certainly be lower. And I'll get to total volume. This happens to be SPY or spider volume. I'll get to total volume in the NYSE and in the NASDAQ. In the Qs, the same thing is here. Now, I'm going to go back one more time to the spiders. Now, those of you who have listened to these briefings for a while know that I watch what happens in counter trend rallies. And counter trend rallies typically are accomplished on weaker internals in terms of a down move, which would have a counter trend rally to the upside on weaker internals. And there's a lot of times that you'll see a three-legged rotation, like 1, 2, 3. And sometimes, not all the time, but a good percentage of the time, there's equality between legs 3 and legs 1. That projects up to 580, which is an important key reference area, the lower extreme from this area of rotation. Now, in the Qs, we have the same thing. We have a leg 1, 2, and a leg 3. This is suggesting that this is counter trend to this move here, which would then suggest the higher probability we're going to see this low taken out at some point in time. Equality comes in right here. I put up this trend line right at the 492 area. So we're at an important inflection point in terms of the NASDAQ volume. So you can see the volume a little bit better declining. NASDAQ breadth diverging as well. So this certainly, when you look at it from at least a daily perspective, this part of the rally is certainly not strong and is not strengthening, which would suggest the potential for a breakout, at least at this point in time. Once again, the negative part of this and what I'm trying to say is that from a technical perspective, this rally is a very weak rally, but it can change based on a news event because each day when news comes out, we see the market move a pretty substantial amount, except for the last 7 days. And of course, yesterday we had a gap up and the gap held, but also these upper extremes held as well. Looking at the Russell, you can see it is right at rotating around this 197 area. This is an important key reference area. Volume declining and breadth declining also in the Russell. Now, in terms of overbought and oversold, we were approaching an overbought condition yesterday. The decline we saw today certainly has worked off some of that overbought condition. So I'm going to call this basically neutral. So it basically allows for the market to go in either direction beginning on Monday. Now, here's the real crux of the matter. This is total volume on the NYSE. This is total volume on the NASDAQ. So I put a 10-day exponential moving average up of volume, which is the red line. And you can see the trend, the total trend in volume is down. And this goes all the way back. Let's call it all the way back to April, the beginning of April of this year. And the same thing with NASDAQ. Now, NASDAQ volume, you can see there's a little bit of an increase here. But I think that's skewed because of what happened on April 29th. We had this huge volume spike. I'm not sure what caused that volume spike. And then, of course, on April 9th, we had the same thing, another volume spike. And I'm not sure whether that was the squaring up of positions by some large traders or not. But certainly, This, if you look at the trend in volume, the trend in volume is down, even though for the last couple days we've seen total volume on the NASDAQ increasing slightly on a 10-day exponential average moving basis. So this is really the crux of what I'm looking at going forward. We really need to see if we're going to see some type of move above these key reference areas, this 580 area in the spiders, then we really need to see some volume coming in. We don't need it to come in all in one day, because that suggests exhaustion. Just as you can see here on this move here, you had huge volume that came in on that day, and that was a clear sign of exhaustion on the part of sellers. Then it followed through on the next day, where we had a huge amount of buyers coming in, just absolutely driving the market right up to that 550 area, which was a pretty significant news event on that day. It's going to be an interesting week next week. I'm concerned, or I'm anxious to see a breakout of this area of rotation, the last 7 days of rotation. I'd really like to see a breakout point where we can really get some good movement in terms of price development, either to the upside or the downside. But right now, the trend is up in price, so you have to respect that. And you know, I trade to the long side right now. I'm trading to the long side right now. But I am really, there's a point in my gut that tells me that based on what I'm seeing with the internals, I need to be very, very cautious, because any type of bad news event is going to send this market in the opposite direction. Have a great weekend, and I'll pick this back up again on Monday for subscribers. Hopefully the market's going to give us a little bit more information as to next greater degree time and price move.